program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Terrific you can join us here at AusBiz as we get across what went on globally with a focus overnight. Global shares mostly higher. US Treasury yields fell. That's after weak jobs data solidified expectations of a Federal Reserve interest rate cut next week. Wall Street's major indices finished in the green amid choppy trading, with energy, financials and the material sectors higher, while tech stocks proved to be a drag. Microsoft pared losses after earlier sliding around 3% on reports that it's lowered its expectations for AI product sales. Marvell Technology shares surged after the chipmaker said it will buy semiconductor startup Celestial AI in a deal worth around $3.25 billion. Microchip Technology also rallied after the chipmaker raised its expectations for third quarter results. And among the retailers, American Eagle Outfitters shares jumped higher after raising its annual comparable sales forecast, betting on strong demand during the holiday season. Macy's warned of choosy customers during the shopping season as inflation pressures spending on non-essential goods, even as the department store operator posted a surprise quarterly profit and raised its annual targets. And Dollar Tree raised its annual profit forecast and beat quarterly estimates. Elsewhere, JP Morgan saying it sees Rio Tinto as its conviction large cap play, with an abundance of value to unlock in 2026 under its new chief executive. Meanwhile, shares of the copper miners rose, tracking higher prices of the red metal, with US listed shares of Rio and BHP gaining. And Glencore shares jumped as much as 6% in London trade as it outlined plans to almost double copper production over the next decade as it looks to reverse a slump in output. Well, US private payrolls posted their largest fall in more than 2.5 years in November as small businesses shed jobs, private employment decreasing by 32,000 jobs last month. With the US economy adding 119,000 jobs the prior month, the unemployment rate is at a 4-year high of 4.4%. And the ISM services activity beat expectations and remains in expansionary territory. Now, following the data, US rate futures pricing in a close to 90% chance of a 25 basis point cut by the Fed next week. US Treasury yields retreated on the data as concerns about labour market weakness grow. The 10-year yield falling to 4.05%. The 2-year was around 3.5%. And the US dollar index down 0.5% on the day. The Aussie has climbed to 66 US cents. On the commodities front, oil prices have risen after the US and Russia failed to reach a deal to end the war in Ukraine, although gains were held back by fears of oversupply in the market. Brent crude around 0.5% higher at $62 a barrel. Copper has rallied to a fresh record, up almost 3% to $11,400 a tonne after a request to withdraw the metal from London Metal Exchange warehouses surged by the most since 2013, in fact. And iron ore fell around 0.5% to 107 US a tonne. Gold little changed, trading at around $4,200 an ounce. And Bitcoin has continued its rebound, now almost at 94,000 US dollars. Let's now turn to investment opportunities in energy with a focus on the infrastructure that enables AI. Matt Sallee is the head of investments at Tortoise Capital and is president of its Energy Infrastructure Closed-End Fund. He joins us now. Matt, welcome to AusBiz. Great to have you on the show. So, of course, we know the focus has been on that AI thematic that has played out. We are at the beginning of an AI revolution, you would think. How do you quantify the expected energy demand to power the AI boom?
We actually run internal models, and our forecast is electricity demand in the United States is going to grow 20 to 30% by the end of the decade, and we think this is going to continue a lot longer than the next 5 years. Along with that, that's going to result in the need for a lot of additional natural gas production to produce all that electricity. So on that front, on top of an already very robust LNG export story out of the U.S., we could see 10 plus billion cubic feet per day of natural gas demand just to power the AI push. To put that in perspective, the U.S. consumes about 100 BCF per day. So we're talking about 10% growth just from the AI trend.
So gas, as well as what other energy sources are likely to power this?
We also think natural gas is the big winner. Renewables will continue to play a role as a complement. And, I think longer term, we believe nuclear will certainly play a part. That's going to be, 2030 and beyond. We do have 3 reactors being brought back to service. So I think we're really calling on all forms of energy to produce the electricity that's needed for a national imperative, which is to lead or be a leader amongst the AI race.
So perhaps let's look at those likely to benefit then, and particularly the energy infrastructure. You talk about AI and income plays essentially. What are you looking at the moment?
What's interesting this year is the energy infrastructure has not kept pace with a lot of the other AI names, AI names that have done quite well. The energy infrastructure space, so think the pipelines transporting natural gas from the producing areas to consuming areas, are only up a little over 5%. At the same time, they're offering 5% dividend yields with 5 to 7% growth in that dividend yield. These are investment grade rated companies, and they are definitely a long-term beneficiary from this AI trend. And the interesting thing about this space is historically it's been dominated by companies, taking oil out of the oil producing basins, tend to be lower quality counterparties. And now the counterparties are the hyperscalers. So much higher quality counterparties, much longer contracts. So we think the outlook for the space is quite strong. And it's like one part of the entire U.S. market that is not trading at record valuations. There's still discounted. Energy infrastructure is discounted relative to its 20-year average by about 20%. So pretty interesting value opportunity there.
And Matt, can you mention some of those names? I see you're pointing to Williams generating power it's powering Meta's data centers. EQT Corporation, the largest natural gas producer.
On the producer side, so I mentioned all the additional natural gas we need. Natural gas prices have definitely moved up in the U.S. They're about $5 on a spot basis. We think they're going to have to move considerably higher longer term. And for a company like EQT that has very low cost of production, this is going to generate significant free cash flow for them that largely just drops to the bottom line. So a very interesting name. And as I mentioned before, the call on additional natural gas is tremendous in our country, we believe.
It's also fascinating to see how some companies are evolving as this revolution plays out. I'd point to Dell Technologies, which you say is essentially evolving from that PC manufacturer to an infrastructure provider.
Yeah, I don't know if you remember the commercials back 20 years ago. It was the dude, you're getting a Dell commercial. And instead of being a PC maker, they're now pivoting to be a key AI server producer. So transforming their business to one that's receiving a higher multiple, still trades at a discounted multiple, but much stronger growth outlook going forward. So definitely an interesting name. We see others. Another interesting kind of conversion story are Bitcoin miners in the U.S. that have had access to power for the last 5+ years to produce Bitcoin. They're transforming their businesses now to basically sell their capacity over a longer term to hyperscalers where they're getting a much higher valuation multiple. So there's a number of just really interesting ways to play the AI infrastructure story. And these companies are the beneficiaries of the $350 billion plus that the hyperscalers are spending this year. So just a wide array of ways to play this AI super trend.
Well, indeed, and further to that, it's not obviously just the energy to power these data centers and so on. It's also they require cooling. Another one on your list I see is Modine Manufacturing. So it's a radiator company that's also pivoted.
You've got Modine's interesting, Vertiv on the liquid cooling side. There's any number of names. Arista Networks is a leader on the networking side. So you can play it through communications infrastructure, electric infrastructure, the memory. We think we're quite bullish on memory and storage. It's just the amount of equipment that's needed to meet this AI demand is phenomenal. It's really hard to get your head around.
Matt, where does this leave those traditional oil companies? What's the future for them?
For oil companies, there I'd say it's a little less certain in our view. Obviously, OPEC's brought back a lot of production, so we are not particularly bullish for the next, call it 2-3 quarters. Longer term, we do believe that oil demand will continue to grow. I think we're just in a period of oversupply. So we're focused more on natural gas and electricity, where we are much more confident in the outlook for demand.
Matt, terrific to get your outlook in the energy sector. Thanks so much for joining us from Tortoise Capital.
My pleasure. Thanks for having me.
Well, let's refocus then on the local market as we get going on this Thursday, just a couple of minutes away from the open. We are expecting a positive start. So SPI futures, last time I looked, up around 0.25%. We'll get across that. We also got some trade data to get across this morning as well. A little later, that information will drop, and just a bit of corporate news out today as well, including bending on Adelaide Bank with an investor day. Stay with us for the open.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.